On today's episode, we are going to take a look at two small growth stocks that are down big right now. And may I say, yes, they do come with high risk, but they also come with the potential of high reward. The first company we are going to take a look at has analyst price targets of $18.60 for the next 12 months, which represent almost a 70% increase from where the stock price is at right now. The second company we're going to take a look at has a market cap of $1.6 billion, but in their most recent earnings, they showed that they have about $1.4 billion in total current assets, mainly coming from cash and cash equivalents. So both these companies are hitting different markets. Like always, we're going to take a look at what they do, a quick look at fundamentals, and my overall thoughts. Now let's get started. Alright, so the first company we are going to take a look at is HIMX. This one's pretty interesting for sure. This is in the semiconductor industry. They create both display drivers that go in a lot of technology that we use right now, and they also create different sensors that go in things from smart home applications, for augmented reality, face recognitions, and we're going to learn a little bit more about them. So right now they are a market leader in the display driver IC, and these are drivers that go in everything from your smartphones to your tablets, automobiles, monitors, notebooks, anything you name right now, anything that has some form of display. Next, they also have the technology for touch sensors display. These are sensors that go in everything from your tablets, right, to your phones, even your infotainment in your car. The next market they hit, I think, is pretty interesting. They have technologies for 3D sensing decoders, right? And these are things that are used, for example, e-payment recognitions, for face recognitions, things that can be used in like smart doors, smart houses, access control, medical inspection. So this market is pretty cool. The other market that they have is ultra low power smart sensing. So these are sensors that use very low power, and this is again pretty good in things that are being used in smart homes right now. We can see their sensors are done for movement detection, for face detection, head detection, even head motion box. The final market that they're hitting is probably my favorite, and this is technology hitting the micro display. This is stuff that deals with, for example, augmented reality and virtual reality glasses, holographic displays in automotive right now. Again, these are markets that I believe will continue to grow right now. So this company is looking pretty interesting for sure. All right, so now that we understand what they do, HIMX Technologies is currently traded under the NASDAQ as ticker HIMX. It's currently down about 6% and is sitting at $10.51. The current market cap of this company is $1.83 billion, and from its 52-week high, the stock is roughly down about 34%. And before we go any further, guys, make sure to hit the thumbs up and the subscribe button and leave a comment below. It really does help out with the channel so much, so let's keep going. Analysts believe this company will grow 11.2% for the next 3 to 5 years, so it's not a hyper growth stock, but it's still growing at some impressive levels. We are going to see fundamentally this company is looking pretty good. They are profitable. They are positive in cash flow from operations. Next, if we take a look at their balance sheet also looks pretty strong. They have about $245 million in cash and about $150 million in debt. So even though they are making money from their everyday business, they're still not leveraged, which is what you want to see, right? Especially as talks of higher interest rates are coming. The last thing you want to see is a company that is heavily leveraged, which we can see HIMX is not. So right now there are 4 analysts following this company in the past 3 months. 3 give it a buy, 1 give it a hold. So that's an average of strong buy right now. The average price within the next 12 months is $18.60, and that represents a 69.7% increase from where the stock price is at right now. And like I said, I was taking a look at this company. This company is super small, and I do believe one of the major risks that we're going to see for this company is, first, it is international, right? It is a company that has their headquarters in Taiwan. Also, in the past year, the stock has gone up dramatically. It's up about 236%. I do want to say those are probably the 2 major risks, and those 2 reasons wouldn't stop me from investing. It would just kind of deter me of how big of a position I would go. So now let's take a quick look at some valuation metrics. I want to take a look at EV to EBITDA forward ratio. Right now it's sitting at a ratio of about 4. This is actually lower than levels seen during the COVID correction. So even though the stock price has jumped up dramatically, right? We've seen the stock price has gone up like crazy. The overall ratio for forward EBITDA beta is lower than that. So again, there is some risk behind it, but I do believe this valuation makes it look super attractive right now. All right, so the second company we are going to take a look at is Nano Dimensions. This is a company in the 3D printing realm, but with a small twist. They actually create electronic boards, right? And this is probably a market I don't see too many companies dealing with. And me as an electrical engineer, I do see the future growth in this company, right? One of the main things that I hate is when I used to design boards, it would take days and days and days, sometimes even weeks, for me to get it back from my vendor. If I had a 3D printer like this, I would be able to do it right overnight and not have to wait multiple weeks to get the product and start testing. The main markets this company is trying to hit is the research for many engineering firms, the aerospace, the defense world, the medical realm, and the automotive and industrial world. And I do believe I can see the huge potentials in all those markets. Nano Dimensions is currently traded under the NASDAQ as ticker NNDM. It's currently sitting at $6.41. It was up 3.5% for the day, but from its 52-week high, the stock is down about 61% and is currently sitting at a market cap of $1.6 billion. And before we go any further, take a listen to today's sponsor. I want to thank the Motley for sponsoring this video. The Motley is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You guys know I love finding new investing tools and resources to help me scout out new growth stocks. And right now I have a discount for one of my favorite services the Fool offers. Through the Motley Fool Stock Advisor services, you get access to a ton of expert stock picks. Every month you'll get 2 new picks that are aimed at growing your wealth and to help you realize your financial goals. Stock Advisor's average stock picks have done amazing returns. If growing your money is something you'd like to do more of this year, you can visit fool.com/Jose Najarro or click on the link below for access to my special offer and decide if the Stock Advisor is right for you. Thanks again to the Motley Fool, and now onto today's video. So if we take a look at fundamentals for Nano Dimensions, it might look scary, but we have to remember this is a company in a brand new market. So right now they don't have positive cash flow. Right now they don't have profitable earnings. Right now they don't even have really strong revenues at the moment. But they do have something else. They have a very strong balance sheet. This company right now has about $1.1 billion in cash and short-term investments, and they have almost $300 million in bank deposits. That's almost $1.4 billion in quick cash available. And remember, this company only has a market cap of $1.6 billion. This company did report earnings today on May 20th of 2021, and they kind of laid out their plan. They have a 3-step plan is what they call it, or a 3-axis plan. The first part of their plan is pretty much to increase their overall sales effort. Even though this is a brand new company, a brand new market, they do have one of what they call an early bird machine, and that's the Dragonfly LDM. Right now their sales are slowly recovering after the impact that the coronavirus had on the business. The second part of their plan is pretty much to continue to invest and expanding on their product development efforts. That's where most of their expenses are actually going right now, to improving their products. The third part of their plan is to focus on merger and acquisitions. They recently announced 2 acquisitions that are in process. The 2 companies that they purchased, I believe, are smart acquisitions. The first one is DeepQ, which was a deep learning, machine learning technology. And with the technology they grabbed with this acquisition, they're gonna improve the overall performance of their machines to become way ahead of the competition. The second company they bought is Nanofabrica, which they state is one of the most unique digital light processing micro 3D printing machine developers in the world. So in my opinion, both these acquisitions make sense, and it will overall improve the future of this company. All right, so now my overall thoughts and where would I put each of these companies. So first, let's take a look at Nano Dimensions. Nano Dimensions, I would consider this a very heavy speculative play. But if they do grow, they're making smart acquisitions, right? And if they do grow in this market, this could be one that can provide strong returns in the long term of things, right? Both of these are long-term investments. Nano Dimensions, if it was to ever enter my portfolio, it would be a tier 3 stock. No bigger than that, right? Because it's heavy speculative. But I do believe even a small position can provide great returns if the company does what it's intended to do. Next, if we take a look at HIMX, this one is pretty interesting. If I may be honest, if it wasn't an international company and I looked at the numbers it did, this could easily be a tier 2 stock. but I'm just not too familiar right now with the markets they're hitting, how the government is in that part of the world. So because of that added risk, I would put it as a tier 2.5, a little bit bigger than tier 3, but not as big as tier 2. I really like HIMX because they did have a lot of strong fundamentals. They're hitting some great markets, and the chips that they are providing are ones that I believe will do great as the technology continues to improve. So that's it for today's episode, guys. Take care, have a good night, and see you next time.